Okay, for chapter 17, you're going to note that this is a very short chapter. It's mainly to show you that there are several WIP accounts for most manufacturing companies, so you're transferring from one WIP to another WIP to probably yet another WIP. So what we're going to do is look at number one first. It's Hershey. There is three raw materials: cocoa, sugar, and dehydrated. These raw materials first go into the blending, then it goes to molding, and then to packing, and then ultimately to the distribution center. So A through E, it just asks, how do you journalize that? So first, you're going to take it out of materials, and you're going to put it into the blending WIP account, and then from blending WIP goes to molding. From molding, it goes to packing, and then from packing, it ultimately goes to finished goods, and then at some point, the actual item is sold. Now, keep in mind, those are just transferring from one WIP account to another, but during those other WIP accounts, there would be costs added to them. In number three, it says here, this company manufactures a sugar product, and it has refining, sifting, and packing. Assuming that the records indicate that the direct materials, direct labor, and applied factory overhead for the first department refining were $1,250,000, $660,000, and $975,000. Also, WIP in the refining department at the beginning of the period totaled $328,000, and WIP at the end was $295,000. So journalize the flow of costs into refining for direct materials, direct labor, and overhead, and then the transfer. So here we go, putting materials into this refining WIP, some direct labor into the refining, some overhead into the refining WIP account, and then it says do the journal entry showing it going from refining to sifting. Well, we had this for a beginning balance. This is what was added to it. They tell us that this is the ending balance, so that means what's left in there is the amount that was transferred from refining to sifting. Number four, the cost accountant estimated total factory overhead cost for the blending is $3,150,000. Total direct labor cost $1.8 million. During February, the actual direct labor was $160,000. The actual factory overhead was $283,900. What is the predetermined factory overhead rate based on direct labor cost? Well, here's our overhead number. The total direct labor is estimated to be $1.8 million. So our rate is $175. B, journalize the entry to apply factory overhead. Well, there was $160,000 of actual at that rate. $175 would be what we would apply, so coming out of overhead to the WIP at the amount of $280,000. What is the February 28th balance in the factory overhead? Well, we applied, so here's our overhead, we applied $280,000. We actually incurred $283,900, so there is a debit balance of $3,900 in there, which means it's under applied. And then the last one that we have for this problem is problem 1A. So I'm just going to summarize these journal entries, as you will note that they are very consistent with chapter 16 as well. Here, letter A, we purchase materials on account. Here, we are taking $470,000 out of materials and putting it to two WIP accounts, and then there are two that are going, these are indirect costs of overhead into spinning or tufting. Wages incurred, direct costs going into WIP, and indirect costs. Here's the depreciation entry going to accumulated depreciation, and then our two overhead accounts for the two departments. Using up some prepaid insurance, again, must be indirect costs going into the two overhead accounts. Here we are applying, so we're taking it out of the overhead and putting it into the WIP accounts. Apply, that is apply. And then we are transferring costs from WIP to another WIP, from spinning to tufting. Finished goods. Now tufting, it's done and it's going into finished goods, and here's our journal entry to close, or to show that the item was actually sold. Step 2, it's asking for what is the balance in like all of these different accounts, materials, or the 2 WIP accounts or finished goods. We'll just pick on the materials since they all run the same. The beginning balance was provided to you in the text. The beginning balance was 17,000. This is on page 882. Beginning balance is 17,000. Debits, what did we add to materials? Right here, a debit added to materials. And here is the credit, taking it out of materials. So here is our 500 and the 7,500 for a balance of 46.5. Would work the same way for those. Then they ask for number 3, what is the balance in these overhead accounts for spinning and tufting? And they tell us that there were 0 balances at the beginning. It's in the reading, so there was 0 there. So here, the 79,000, what did we add into the factory overhead spinning? So if we, it's the 46,000. Here it is, add 46,000. It is the 18,500 right here. There is another one for 12,500 and 2,000. So those 4 amounts is the debits into the spinning, and then what we took out of spinning right here. We took out a credit. A credit of overhead came out of 80 grand. So like I said at the beginning, this is a very short chapter, only 3 exercises and 1 problem. I would take some time to re-review these once again, and you should be good. Thank you.